Good afternoon. Today is Thursday and it's May 11th. Time right now is 12:44 in the afternoon. Now let's do a little bit of recap. Of course, yesterday we have the release of the consumer price index, the so-called CPI. It came in slightly marginally better than expected. Market was expecting 5%. And it came in at 4.9%. So basically the market reacted now. Of course, equity market will be the first to react. We can see that in the Dow Jones, this is the Dow Jones 4 hours time frame chart. You can see that Dow Jones actually went down to 33,239.5 before it rebounded. It closed at 33,535.5. So we can see that this buying pressure come within the bracket of prices, which I've highlighted many times over the last week. You can over this week itself is at 33,256 to 33,354, and the market came just marginally below that before it rebounded. So this actually laid the stage for additional rally going into the tonight's trading, maybe into tomorrow's as well. So this is basically laying the groundwork and for further advances in equity prices, despite the what call that, the uncertainty surrounding the U.S. debt ceiling negotiation, which yesterday was the first time both the House of Representatives Speaker Kevin McCarthy met with President Biden to discuss about the debt ceiling. Of course, they will be having another meeting this coming Friday, which is tomorrow. So we will have to await. Most likely, we will only hear about any kind of progress over the weekend. And this is exactly why the market is nervous, because if this time they could not get some kind of agreement going, there's a very high risk that the US will default for the very first time. Actually, it's not the first time. Actually, in history, they have happened many times before, but they have never had such such anxiety like what we are seeing right now. Because on top of the debt ceiling, we also have banking crisis, and we have a runaway inflation, and we are also seeing sign the U.S. economy activity is beginning to slide. So there's a lot of multiple problems all coming in at one time. So this time could be different. Okay, now in the S&P 500, we can see the S&P 500 also rebounded off this area of price, which I've highlighted throughout the week itself at 4,088 to 4,101. And the market came in at 4,098 before it rebound. And this rebound here set the stage for further advances, perhaps even taking out the year high at 4,195. And if that's the case, I think the market is getting ready to challenge last August high, which is 4,325, and perhaps into this bracket of prices, which I think will actually entice seller to reappear. And this area is 4,373 to 4,517. So do watch out for further rally in US equity, despite all this uncertainty surrounding the US debt ceiling negotiation. Over in the Nasdaq, again, this is the winner here. Once again, the Nasdaq 100 has registered a new high for the week, for the year at 13,384.4 overnight, and it's getting very, very close to challenge the last August high of 13,721. And I think this level will be taken out and maybe see prices extend higher to 14,135 to 14,712. So this is very, very likely, because we have seen how Nasdaq has been so firm and leading the charge higher in equity markets. Over in Asia, we can see we have an exact opposite here. Hong Kong market, in terms of the Hang Seng, registered a high on Monday at 20,321.7 within this bracket of prices, which I've highlighted many times, which I think will attract selling interest, and that area is 20,304 to 20,485. And true enough, the market only went up to a high of 20,321.7 and beginning to lose its grip. And market right now, the nearest support is likely to go down to 19,509 in the Hang Seng. And if this level fail to hold, it will very well go and challenge the year low so far at 18,829. So it does not look good in Asia, because Hang Seng is backpedaling. The same thing is also being witnessed in also the Chinese market. Okay, this morning we have the release of the CPI number, came in very, very good, 0.1%. How the Fed would love to see this number. So China's CPI number is 0.1, practically no inflation. At least that's what the official number says. Okay, over in the Japan, we can see the Nikkei 225 right now is flatlining. The high traded only on Tuesday at 29,278.8, and the market has not gone anywhere since. And although this is an area which I believe will see some selling pressure, which is about 20,100 to 29,100 to 29,470 area, but it does not look like it is capable of capping this run. More likely, I think the market may actually extend higher to somewhere between 29,700 to 30,430 in the index itself. So let's see whether if this is going to be the case, because that will be the larger degree three-wave rally, and this is actually where the pocket of equality is. Okay. Now, earlier on, we did mention how the Hang Seng is also mimicking what we are seeing in China itself. Now, after the release of the CPI numbers, the market actually stabilized a little bit, but not by very, very much. You can see that the market actually topped out at 4,092.85 on Tuesday. And this is also within the bracket of prices which have been highlighted many times, which may actually draw in selling interest. And this area is 4,076 to 4,117. Okay, so watch it. Okay. Over in energy market, we saw crude oil register a marginal high for this month itself at $73.83, but it's not going anywhere. How I wish the market can pull back a little bit for me to enter a buy position, because right now the market is simply not pulling back. And if we do get a pullback, that will be great, because I'm waiting at $67.51 and $68.72. If we get a pullback over next week, this week looks like it's not going to happen, but let's hope that next week we can see a bit of a more decent pullback, because buying at current price makes no sense, because the current price is $73.11 and the nearest barrier is already at $76.88. That doesn't give me a lot of room to maneuver if the price should come back down. Okay, so I would love to see a pullback and then to buy at more sensible level, because if not, then I will just have to watch this market run away. Okay, so in the meantime, we just monitor. Over in gold market, we see that upon the release of the CPI, gold actually spiked to $2,048.23, but it couldn't sustain. And so happened that this area has been highlighted throughout the week, where I think the sell interest may actually appear, and true enough, it is what actually happened. Now this area is $2,040.50 to $2,050.20. The high traded $2,048.23 was within this bracket of prices, and prices looks like it may be starting to unravel from here onwards. And if that's the case, maybe we can see a three-wave pullback targeting somewhere between 1,943 to 1,975. Okay, and this is what I think the market may actually do. Okay, now over in silver market, we did see the silver did attempt to rally, but the best it could do was $25.92 before it would also pull back. Now for silver, it's a lot firmer, because if you do see a three-way simple pullback here, it will be targeting $24.73 to $24.96. But even then, the market should go below $24.70 as another catchment area here at $23.94 to $24.32. So by and large, these markets, if it pull back, looks like a buying opportunity. So watch out for this. Now over in the dollar, attempt to rally, but I think it petered out at 101.63, and yesterday the market actually went back down to 101 even. Okay, so near term, the prospect of a rally into 101.86 to 102.11 looks like it's running away. It may not even happen. Okay, so if that's the case, get ready to see lower prices in dollar, and if the dollar breaks 101.42, it may well go down to break the 100 to go down to as low as 99.64. Okay, so do watch out for this possibility. Currently, the dollar seems to be cannot get a firm hold, and it seems to be slipping away day after day. So over in the sterling itself, we can see sterling went up to a high of 126.80 before it pulls back a little bit, and now the market is getting very close to my target. I'm actually placing a sell order to take profit from an earlier long at 127.35. So you can actually also watch that level if you're already long. But I think there's an outside chance the market may actually go beyond 127.50. So maybe there's a little bit more mileage here, but again, I am quite happy with 127.35. Okay, over in euro versus the dollar, I'm not so optimistic. You can say the euro has been struggling while the sterling has been charging higher. So we can see that on a comparative basis, euro is definitely a sell. And what we are hoping right now, or rather what I'm hoping right now, is that the market can rebound from 109.40 to maybe to 110.17 to 110.35 levels for me to anchor in a short position. Because if this market unravel, the first test will be at 109. If that's the case, I think 109 may not even hold. I think there's a very high probability the market will go down all the way to 107. So that made this currency pair very attractive from a risk reward perspective. Okay, so over in the Aussie itself, the Aussie right now has hit a pocket of prices between 0.6816 to 0.6873 with a high of 0.6818, and that was yesterday, and it has been struggling since. Now I have no view and do not want to put up a trade in this currency pair purely because the barrier is very well defined. We have top side 0.6816, the bottom side 0.67. So that doesn't give me a lot of wiggle room. Yeah, there's about 100 pips in between, but then again, that's assuming you can catch the high and catch the low all at the same time. If you can't, that means the risk is actually quite high. So I'm going to give this currency pair a miss for now. I think this pair is a lot more interesting. Okay, I've been hoping that dollar yen can actually edge a bit higher into 135.65 to 136.15. But hold and below, okay, the market did not go to my ideal price. It only kept at 135.47 last time before it pulls back. But never say never. Who says that it cannot attempt another rally? If it does attempt another rally back into this bracket of prices, I think that would be a great level to actually consider doing a short, because I'm quite bearish on dollar right now, and I think 133 will be challenged in no time. Okay, perhaps maybe before the month is out, let's see whether we can get a little bit of a rally back into 135.65 to 136.50. Okay, now euro versus dollar versus Canadian looks pretty weak. We have a marginal, a very small rebound from 133.15 all the way to yesterday high of 134.15. You can see the market has not doesn't have any momentum at all, and this bracket of prices 133.90 to 134.40 is what I've been highlighting, that maybe it can only go up so far, and looks like it may be the case because we have a reversal pattern on 4 hours time frame. And very soon, I think we don't have to wait until next week. Perhaps before the end of this week, we can see prices go below 132.70, and I challenge the last November low at 132.25. My target is at 130. Okay, so keep this in mind. Over in Bitcoin, what I was hoping did not quite pan out. I have been long on the Bitcoin, but yesterday the market did not go up. It ran back down below 27,000 to register a low at 26,842. Now this area still maybe has a chance to rebound, but I'm no longer targeting 30,000 because it has failed 3 times in a row. So this time the market can rally anywhere to near 29,000. I'll be more than happy to take profit and just get out, and watch for a time being. But this move, I have expectation, but it looks like maybe I am either wrong or I am long too prematurely. Okay. So in the meantime, that's all I have for you. I'll come back to you tomorrow morning with another update. In the meantime, you take care and be safe. Bye-bye.